All right, welcome to the closing beat, everybody. Happy Friday. How's it going? Man, it's been a long week, but getting a lot done here. Very, very, very happy with the progress this week. We're going to talk about the markets here. If you're just joining us for the first time, my name is Dustin Tibbetts with Jazz Wealth Managers. We specialize in managing retirement accounts, long-term investments, anything we can do really to help you with your retirement investments. We manage our own portfolios. We are fiduciaries, and we are officially SEC registered financial advisors. So if you want to look us up on our website, you'll see us next to Fidelity and all the other T. Rowe Prices and Raymond Jameses of the world, and so we're very, very proud of that. Stock market today, kind of just a quiet Friday, a little bit of back and forth. We've got the chart up here for you if you want to take a look. That's the 5-minute performance of the markets, just wiggling back and forth. The red line right down the sort of the middle there shows the movement. Initially, the markets were a little bit higher. The trade news was going well with China. Everything was cool. And then Trump said, hey, actually, we want to go ahead with the $200 billion in tariffs. Well, a report from Bloomberg came out that said that we're going to go ahead with the $200 billion in tariffs. And a little hint, that's called steering the news. So the White House was steering the news away from the Paul Manafort case and all that stuff. Basically, when financial media and media in general is now going to have 2 days over the weekend to sort of pound people with information, the White House was hoping to push the news towards the tariffs and sort of take the beating in the short term for the tariffs. So it's called steering the news. It was well done today, but obviously it was very obvious the way they did it. So either way, I'm sure we'll be talking about that going forward. So we had the Dow actually closed up only 8 points, pretty much a non-event day. The S&P was flat, meaning it didn't gain or lose really anything at all. You can see it on the charts. It gained less than 1 point. That's called flat. And the Nasdaq 100 was down 3 on the day. A lot of interesting things that we can talk about there. What else do I have for you? Let's do it. Let's just go over to the charts and take a look. Here are some charts. We've got the Dow basically flat. You can see, let's zoom in a little. So sitting near the highs here over the last few months, very quiet back and forth day. If you've been in our candlestick class and you're one of our customers, you know that that candlestick tells you, I can't do anything. I need more information. I can't act or make any major decision based on that. So that's what we got there. We got the same thing with the S&P 500 sitting near the record highs, but really unable to get anything done today. A lot of that coming because of the tariff concerns. And then the Nasdaq 100, so desperately trying to hang on to support. We've talked about that all week long, actually. If you're a technical trader, you really don't like that the Nasdaq can't continue on its way with relative ease, meaning it's not so hard for it to get going. Now, where was the good news today? Well, semiconductors. Whoops. There we go. Semiconductors up 1% on the day. Here's the thing. If the Chinese trade war thing is going to go well, then there's a lot of these semiconductor stocks, Texas Instruments, what did I mean to say? Intel, Micron, Texas Instruments, all of them, they have a lot of business overseas in China. So we really need that thing to go well for these guys to do well. Now here's the cool part, and this is my sort of, not a prediction, but hey, let's have some fun and see what happens. If the Chinese trade war thing gets solved, the semiconductor stocks blast off, in my opinion. I think they take off and things go really well for that space because we're able to sort of work with China, hopefully on a fair level or something that both people agree on. Well, that's going to help sales of these semiconductor stocks, and we all know that you need semiconductors to get the stock market to go higher. Add to that the banks, with interest rates starting to go up, that could help fuel the pop in the banks because we've seen a little weakness there. And so when is all that going to happen, right? The real China trade war thing's not going to take place until after midterm elections. That's also going to be after the Fed raises rates again, and maybe if it goes further into the holidays, maybe even raise rates twice. So you got good news potentially for the banks. If the trade war thing goes well with China, then you've got 2 of the strongest, most important sectors of the market that could help push us higher. So if you're a bull, you're sort of playing that game going, come on, China, trade us well. So keep in mind that a lot of that, the Chinese news right now, that's just going to be back and forth. Nothing official is going to happen for quite some time. So we'll let that keep going. We'll keep you posted, of course. But semiconductors had a good day today with that sort of positive Chinese news there. If we look over at the banking stocks, you know, they've been weak. So they haven't participated in much of the market's rally lately. They, in my opinion, have been willing to go wherever people want to push them. Normally, stocks are on a mission, right? Look at AMD, look at the healthcare sector. Those stocks are on a mission to get something done. You are not going to tell that sector, hey, just go higher when they go lower. Banks seem like they're really willing to do whatever, good news or bad news. They could go either way. We've talked about that before, but if you're a bull in the banking stocks, you like that it held the 200-day moving average today. Regional banks also, they were a little bit weak over the last couple days of interest rate news, and they tried to recover a little bit today too. So I like the I like the idea that the banks are ready to go at a moment's notice. Have you noticed, by the way, that every impressive rally here has been led by the start of the banks? The banks and semis got us going, and then the banks backed off. Semiconductors kept going. We're in that same boat right now. So there's a lot of potential maneuvering that could push the markets even higher. I want to look at healthcare real quick. If you look at healthcare, that broke out to new highs. That uptrend continues to be on an incredible, incredible pace. One of those things we've been talking about here for a while. So very interesting over there. And now I thought, I don't really have a lot to go over today. We'll do a couple stocks, and then I thought we'll just start looking at charts. I can't really tell you to buy or sell, but I can share my opinion on what I think the chart looks like. And so I had some fun digging around with some charts, and if you have something you want me to look at on the chart, let's just do a technical overview, and if I happen to know something more about the fundamentals of the company, I'll share it with you. But anyways, Adobe breaking out to new highs, 2.5% on the day. Earnings better than expected, revenue better than expected. They really played this one well, by the way. If you like to follow the drama and the sort of news of how people play stocks, so earnings and revenue better than expected. However, the company had the opportunity to guide higher, meaning tell Wall Street that yes, going forward we expect things to be better than what you guys are currently predicting as far as the Wall Street analysts. They chose not to do that. I thought that was very clever because now, somewhere between this earnings report and the next one, which I think takes place late December, maybe a little bit further into the new year, between now and then, they have the opportunity, when the stock is a little bit weak, to then raise their guidance. So it's just known as a mid-report guidance raise. So I think that's what's going to happen with Adobe. They're going to shock you one day when things get a little soft. They're going to come out and say, hey, you guys are expecting us to make, what, like $1.60 a share? We're going to do probably $1.70 or something like that. And that'll send everybody racing to buy the stock. So I just thought I'd share that with you. Little things that you notice when you stare at this stuff all day. Limited Brands, we'll talk about that in a minute, but Limited Brands is going to sell one of their handbag companies. Smart move. They're doing some cost cutting there. Stock was up by 5.5%. Hasbro, we're going to talk about that one in a minute as well. Stock was up 2.1%. Oh, I guess I'm running low on storage on this laptop. Hasbro, Jeffries, there's a company called Jeffries, and they, when they speak and they have an opinion on, individual stocks, people tend to listen. They said, we're going to put this on our franchise pick list, which is a fancy way of saying we're going to put it to the top of our list. They think the stock's going to jump 50% or more in the next 1 to 2 years. They said that they've got their brand and content pipeline should add to their cash flow. I don't know. I mean, if you like that sort of thing. Hasbro, we'll talk about that whole sort of category in a minute. Amazon, down 1% today. They said they're going to decide on the location of their headquarters, their second headquarters. And the word's kind of already out. It's in the Upper East Coast. It's in the Washington, D.C. area, or there's a Brooklyn neighborhood where all of a sudden this massive warehouse is starting to see more action, and the more trucks are coming in and everything. So it may already be out. It's one or the other. We'll see what happens. Bezos said he's going to announce that by the end of the year. Coca-Cola was just slightly higher today. Guggenheim, another analyst firm, they called it their best idea. That's aggressive. I thought that was awfully brave of them to say that about Coca-Cola. It doesn't normally move. I mean, what's the stock going to do? So they had a bunch of reasons. We'll see how it does. I hope the best for it. Dunkin' Brands down 2.33%. There was a lot of these. I'm not going to do all of them today, but there were a lot of these reports, analyst reports, where they said, hey, we don't have a problem with the stock, but we're downgrading it because they've done so well, we think prices are too high for the valuation. So it's basically, this analyst was saying they had a turnaround, they did great, however, we think the stock is fairly valued now, so they downgraded it, not downgrading it because they think something negative about it. There's a big difference there. Costco was down 2% today. Also something similar. They said the company has been stellar. They've been doing, stellar was actually their word, right? Yeah, that was actually the analyst firm, Guggenheim. They said stellar performance by the company, but that performance is now reflected in the current price of the stock, and because of that, they downgraded it. Lastly, we'll do NEO. Boy, this company, I don't really like to share opinions too much because, you know, the only wrong opinion is the one that loses money. So it doesn't matter what I think, but the company basically saying they're going to make 100,000 cars. They've only made 2,000, or maybe they only sold 2,000. Either way, 2,000. But in the next 2 years, they're going to go 100,000. To me, it sounds like just a lot of hype. Because if you do the math, the money that they raise, they can't build 100,000 cars with the money that they have and still pay everybody and operate, despite the fact that they don't even actually build the cars that they have. So that's my opinion there. Anyways, SpaceX. So Elon Musk continuing to try to pull attention away from him smoking weed on that show. Really big deal, right? So SpaceX has their first passenger who signed up to sit on the rocket, like inside, sit on the rocket and go around the moon and come back home. Be the first time ever, and they said they're going to announce who that is very soon. It's probably somebody very wealthy that we've all heard of before, but that's going to happen soon. That'll be the first time that's ever happened, and that will grab a lot of media attention, no doubt. And that's really all I got, right? So, hey, Adrian, cool. Yeah, thanks. Brendan, he's had enough of that, that AMD. I agree. Next week, by the way, we've got Oracle reporting earnings on Monday, FedEx reporting earnings on Monday. Those will be the two that get the focus. So if you want to know what stocks will be in the news on Monday, that'll be that one. And basically, I will just kind of take a look at a few charts. I just want to share a few things with you guys. That's all I have for you. If you want to go, you can go, but I'll go back here. Let me pull up, I made a little list. Some charts that I like. Let's go back to limited brands. So limited brands, this goes in my discount section. If you're interested in buying something at a discount, every analyst has almost every analyst has a price target greater than $30. That's 15% higher. So you're buying a stock that's discounted, that's starting to make the right decisions in their cost-cutting efforts. Remember, they had problems with Pink. And Victoria's Secret's doing okay, but Pink was the problem. They're adjusting all of that. As the days go on, they're fixing, they're working, and analysts are starting to pick up on it. I can tell the investors are starting to pick up on it because you've got higher volumes picking up here. So a lot of people looking at limited brands going, they'll figure it out, let's buy a discount. So I thought that looked interesting. We mentioned Hasbro a minute ago, but really the chart that I like as far as a technical perspective is Mattel. We've talked about them a few times this week already, with them doing their own videos, their own movies. They're branding their Barbie and Hot Wheels and stuff all together. Now, financially, Hasbro does a little bit better, so this is more of like, you know, you taking a shot, right? If there's something that interests you, or everybody that bought in the last couple of days, they're kind of taking a shot that things are about to turn around. It is a longer term play for someone that's looking for that. I noticed a few other things in the defense space here. United Technologies, that's a technical pattern, that's a chart pattern that people love. They are obviously attracted to that today. I do expect that to continue in the short term, although that's just, you know, what we see on the chart. So if you look at a few others, they all kind of look similar. Lockheed Martin has performed a little, has underperformed a little bit, but the same general pattern. It was stuck at these series of highs. It broke out today. And a lot of investors or technical traders are going to expect that to continue. And then probably the best one, Rockwell Collins. So it doesn't look like much on this screen because it's kind of sat here for a while. But if you go to a weekly time period, that is about as textbook of a breakout as you can kind of put on a chart. You want to see a stock that rallies aggressively and spends a long time sitting up high. And this goes back to that article that we talked about yesterday where somebody in the Wall Street Journal said because there's no volatility at the market highs means investors are scared. Ridiculous. So look at this. Imagine this is the stock market. You got a big rally and then nothing happens for weeks and weeks and weeks. Because nobody's scared, nobody cares, nobody wants to sell their position. It's that obvious, right? If you bought anywhere in here, you had the chance to sell. If you're a big mutual fund, a big hedge fund or something, you acquire a huge position, you have the chance to sell and push the stock down, but nobody did. And so because of that, you have nothing but buyers really left in this stock. And I think Rockwell Collins looks pretty good. And then we'll pick on this Raymond James. This is a technical pattern I just thought was unique. So if you'll give me a second to draw this out here, technical traders are going to do this. They're going to take a line and they're going to go like this. And they're going to go, great, that's resistance. That's the price area you want to get above. Then they're going to come over here and they're going to draw this line and they're going to go, ooh, look at the support. And so what they're doing is basically, I wonder if I can make these bigger for you. Yeah, let's make them bigger. So what these guys are doing is they're saying, hey, look, there is a rising area of support. Every time it falls, it doesn't fall as far as the previous time and so on and so on. However, every time it rallies higher, it does not go as high as the previous time. And so you have this, what they call a wedge, and it's just pinching the price tighter and tighter and tighter and tighter. We did this with the market. We showed you this in real time as it happened. So this is the same thing. When this moves either above, which is what everybody's going to prefer, around like the 93.50 area, or breaks down below here, that's where everyone's going to come running, all the technical traders, and they're going to go, hey, it's a trade. Look, boom, we can take a trade. And so it's pinching in there tighter and tighter and tighter and tighter and tighter, and it'll do it. It'll just keep going, and then watch what happens. One day, there'll be news. It'll come out. The stock will either push higher above or push below, and the shorts will take over. But I just thought that was interesting. It's one of those that if you take a second to look at a chart, you go, there is about to be something that happens here, and now you know exactly which side you'd want to participate on based on what happens. So I thought that was cool. I don't know, maybe it's too much. Maybe you guys don't like it, but I'm happy to play around with stuff like that. We'll come back to it too. Someone remind me if I forget. Costco, that we mentioned a minute ago. I think you got your answer on that one. In the short term, obviously analysts think, and everybody kind of thinks, it's time to take some profits and move on from that one. I would agree. I think it'd be great if Costco could just sit there though, right? If it just sat here and moved sideways for a while, that would make people second guess their opinion. Analysts would change their mind. Technical traders would start going, well, maybe I guess we got to buy Costco, and that would help fuel that higher. And then as far as Visa, that's an impressive, impressive rally. This type of rally can go on for forever. There's no real reason to stop it. Why? Because it doesn't go too far too fast. Contrary to AMD, way too far, way too fast. No one of you anywhere is still holding the stock. If you bought it, that's the problem with this. If you bought it anywhere in here, look at all these days where people were like, ooh, it's too far, and they sold. Or that maybe someone held through the first one and then they go, ah, too far, too fast, let me take my profit. So you have this continuing to go on. What happens the next couple days? They go, damn, I missed part of the rally, let me get back in. And then they push it higher. And so this back and forth is kind of tough, and it will not last in the long term. Something like Visa, very slow and steady, little pullbacks, calm, right? Everything's cool. When the stock falls, it rallies. You don't really have much concern in there. There's no real fear. MasterCard looks very similar. You'd kind of expect this to continue until the stock market proves you otherwise and falls and has there's some negative news or something goes wrong, or we make it to next earnings. When you get to the next earnings cycle, that will be the next major catalyst to really sort of be good or bad for Visa. You really don't expect any other news in the meantime. Any of the conferences in California, Chris? Nothing at the moment. I don't even know if there are. I know there's a San Francisco one like next week or the week after or something, but I'm nowhere near ready. Broadcom, AVG, oh, there we go. So Broadcom, we mentioned this the other day on that day, that the earnings day, that it broke up there and did well. This is just, I'll be honest, this is a tough stock to trade, right, Brendan? So if you're playing along with this one, one day you're excited, one day you're scared. The next day you're excited, the next day you're scared. If you're okay with that, go with it. When we used to teach traders, I used to teach traders all over the world. When we would do that, we would look at a stock like this and go, it's not worth it. There's thousands of other stocks to choose from, like a Visa or MasterCard or something, that show consistency where you don't have to wake up going, oh God, where's it going to be today? So if you can avoid that emotion in your short-term trading, it's nothing but good can come from that. You like the stuff? Cool. You got AMD from, okay, well, where's your profit? So Brendan, that's what I'll ask you. You're one of these investors, you're like, man, I got in at 20. And what has happened since $20 doesn't faze me at all. That's not enough profit. So Brendan says from 20 to 32 is just not enough profit for me to sell. Even a piece of your position, I gotta say, man, if I had that, there would be something coming out. If I had 500 shares, there'd be 100 coming out. And then that last time it popped up, there'd be 100 coming out. Where will you get out? So what's your profit target, or what is your dollar target? Like, what are you waiting for it to get to 36, 50, 90, whatever it is? That's the real question, because you want to know that answer ahead of time. Because if tomorrow, what is it, Monday? If Monday the stock starts selling off and it doesn't bounce anymore and that's it, you're going to be in that mindset of, oh crap, where do I get out? What do I do? Do I get out now? And you're going to end up selling for less than you would have anyways, speaking from experience. So on the way up, always think to yourself, can I peel off a little bit? Do I have whatever, 500 shares, 10 shares, doesn't matter. Can I peel something off, walk away, relax, go, damn, I got a profit, this is cool. Then come back and go, okay, AMD, you're gonna go up another 7%. Didn't quite erase all of yesterday, but you go, okay, if you're gonna break out some new highs, I'm gonna sell while people want it. We used to give the, what do we call it? We used to give the analogy that there are people that wanna buy this stock, and if you don't sell the stock to them, who will be left, right? So as people are greedy and want to buy, give them some shares. Let them have a little bit. If they want to buy more, you go, here you go, a little bit more. So that's the real question. Where is your profit target? You sold 30% of it so far. That means you had a goal. Hopefully you had some goal and you didn't just wake up and sell it. What was the reason you sold the 30? You don't have to tell me. I'm just saying, think this through. What was the reason you sold 30%? Where will you sell the next 30%? And what happens if you wake up to Monday and the stock is down 10%? Well, clearly you wouldn't do anything because it already did that. So if the stock falls 15%, will you get out? If it falls, 10% over 3 days, just think it through so you're not playing defense. Always be on offense when it comes to profit taking. Keeps the emotion out of the entire game. Makes it a lot more fun too. So enjoy. Good job, by the way, on that trade. Nice trade. Okay, so I'm going to wrap it up there. We have got a nice weekend planned here, and good luck. If you're in the South Carolina, North Carolina area, you're probably not watching at the moment, but stay safe, guys. Be sure. I know it's been a year since we've went through our mess down here, and we're sitting in the dark, but enjoy. Do the best you can with what you got, and just hope the best. But for the rest of you, enjoy the rest of your weekend, and we will be back on Monday to do this all over again. Enjoy.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new Fin Tips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.